Welcome to Finder Facts, where we answer your most burning questions. Today's topic, how do you get a low-interest car loan? With car loan rates dropping to a 7-year low, it's prime time to score your next new ride. As car lots are cleared and those 0% APR deals dwindle, it may get difficult to find the sweet 4% rates that were seen in May. Joining me today is one of Finder's loan experts, Kelly Guiden. Welcome, Kelly. How are you doing?
I'm good. Thanks, Ezra.
To start us off, what led to these low interest rates?
Several factors play into these low car loan rates, but the top two are the Fed rate and offers made by dealerships.
Let's start with the Fed rate.
The Federal Reserve cut interest rates in March of this year, which allows lenders to offer loans at a lower cost. Often when the Fed rate changes, loan interest rates will also change.
That makes sense. And the dealership offers, when do those come in?
Right. So, due to massive shutdowns, dealerships have been extending more financing offers, and 0% APR is one of the most popular. In fact, over a quarter of car loan rates in May of 2020 were 0%.
We know why the rates drop so much now, but how can you get one of these low-rate car loans?
While it would be good to score 0%, usually only people with excellent credit, a score of 760 or higher, and a low debt-to-income ratio can qualify. But even if you can't get a 0% APR, you may qualify for other dealership offers. A discounted MSRP can soften the overall cost of your loan significantly. Dealerships are also offering deferred repayments, up to 90 days in some cases, but interest still adds up during that time, so you may be stuck with higher monthly payments and a higher overall cost.
And what about getting a car loan from somewhere other than the dealership?
Similar ideas. Shop around, compare your options, look out for more than just a low interest rate. Things like origination fees and prepayment penalties can add to the cost of your loan and make it more expensive.
And what specifically affects the interest rate?
Your interest rate is determined by several factors that depend on your lender. The most common ones are your FICO credit score. The higher your score, the lower your rate. Your debt-to-income ratio, how much you owe versus how much you're bringing in. A lower ratio means you have less debts compared to your income, which lenders tend to see as less risky. Your loan amount, buying a Lotus is going to be a lot more expensive than a Prius. Similarly, if you're able to put money down or trade in your current ride, you can lower the overall loan amount, which may help you get a lower interest rate. And the loan term. While a long loan term can spell lower monthly payments, it also makes for more interest costs over the life of the loan.
Well, with all that in mind, when is the best time to buy a car?
While it's traditionally said that October through the end of the year is the best time, that may not be true this year. It's impossible to say exactly where the economy will be by then. As you said, rates are at a 7-year low. If you need a new car, can find a good deal, and can comfortably afford the payments, now is a very good time to buy. If you think you might want a new used car in the next several months, now is a good time to act to avoid a potentially much higher rate. With Wells Fargo leaving its partnership with independent car dealerships, used car rates may see a significant spike if other banks follow suit.
Great information, Kelly. Thanks again for joining us on Finder Facts today. If you have any more questions, check out a link in the description box below for a guide on car loan rates. Or if you're already on our page, just scroll down to read more. And you can find other guides on buying a car at finder.com. Thanks for watching and drive safe.